Welcome to the IFSL Brunsdon Investment Market Update. I'm pleased to have with me this morning Frank Atkins from Brooks Macdonald. Welcome, Frank.
Thank you, Brian. Nice to be here.
Thank you. And Frank is one of the investment managers from Brooks Macdonald who looks after the Brunsdon Asset Management Funds. Frank, we've had a number of questions recently from our clients, in particular leading up to the Brexit negotiations, etc. But one question, the US market has been very strong this year. What are the reasons for this?
Yeah, it's indeed a very topical question, what's going on in the US at the moment. There are two main reasons as to why the US has been so strong. The first is that the general economic situation in the US is looking very good. The metrics that are used to measure the strength of the economy over there are all pretty positive. Growth is looking sort of annualizing at about 4%, which is very strong for a developed economy like the US at this stage of the market cycle. Wage growth is picking up. Unemployment is very low, and inflation is ticking up nicely, although it's staying within a range which is comfortable for the Federal Reserve when it's aligned with its monetary tightening policy. So that is the first reason. The second reason is Donald Trump's tax cuts. Now, Trump's tax cuts have the effect of boosting corporate earnings. They pay less in tax, and so their profits are higher. And of course, companies whose earnings are growing and whose profits are growing attract more capital into their shares, into their equities. So that is the other large factor. Trump's tax cuts are definitely having an effect on the attractiveness of the US equity market at this point in time. But generally, there's also a sort of a liquidity tightening going on. So the US are looking to raise interest rates, and this has an effect on strengthening the dollar, and this attracts capital to the US from other economies. And so the more people who are looking to accumulate dollars, they can do this by buying US shares and US bonds. And again, this is another factor which has driven the market higher.
On the flip side, of course, emerging markets have had a pretty tough time. What are the issues in particular causing this?
Yeah, indeed. The issues in emerging markets are largely linked to what's going on in the US. I mentioned that the strength of the dollar attracts capital into the US, but on the flip side, that sucks capital away from the emerging markets in particular. That means that there is less demand for emerging market equities, emerging market assets, which has sent their share prices falling. And of course, it has a knock-on effect into the value of the emerging market currencies. So once the currency starts to fall again, the attractiveness of emerging market equities becomes less, and it becomes a bit of a vicious cycle. But alongside that, there are some country-specific issues which have been happening as well, which have affected emerging markets, specifically in Turkey, where there have been concerns over President Erdogan and how much power he has. He's taken a grip over some of Turkey's key institutions, and this has particularly spooked the financial markets, who are concerned on the impact it will have on the Turkish banking sector if interest rates are not to rise enough, which would mitigate some of the effects of the currency weakening that we've seen so far this year. And the second specific issue has been in Argentina. Argentina has got a history of debt default, and it does appear as though Argentina will need some kind of assistance from the International Monetary Fund in the near future. So two issues. So it's the reverse of the US currency strength and some specific country issues affecting emerging markets.
The pound, Frank, it's been having quite a lot of volatility recently. Is this largely down to Brexit, or are there other factors to take into account?
It is mostly down to Brexit at this stage, Brian. If you look at the correlation between movements in sterling and the pronouncements that are coming out from the likes of Michel Barnier and Dominic Raab, who are negotiating from the UK side, you will see that any comments which can be attributed positively to the likelihood of a deal being struck are good for the value of sterling, and you'll see the value of the pound rise. And of course, on the reverse side of that, you will see that if there are negative sentiments coming out, perhaps that a solution to the Irish backstop, for example, isn't likely to be found in time, then that has a strong negative impact on sterling, and that is why you are seeing this increased volatility of late. We're approaching, I suppose, the finale of the negotiations. There has been some discussion that there may be a deal struck in November. There's a meeting in Salzburg, which is key, and I think that a positive outcome, so a striking of a deal in November, could see the pound move back up towards the 140 mark. It's currently at 130 versus the £1.30 versus the dollar, but a negative outcome, a no deal, could send it back down towards the 110 range. So it's something that we are certainly having to keep a close eye on at the moment, because it has a large impact on the returns that our clients will get from the funds.
Let's talk about the BAM funds, the adventurous and the cautious funds at the moment. What's actually been driving the performance there at the moment?
Well, we mentioned, didn't we, at the start, how strong the US market had been, and essentially the US market has been the main driver, indeed the only driver really, of equity market returns this year. So the BAM funds typically have about 20% exposure directly to US equities, which have had a strong return, but also they have a similar exposure to global equities and thematic equities. That's the likes of technology companies and healthcare. And a lot of the big technology companies, obviously the likes of Google and Netflix and Amazon, are based in the US, and they have benefited as well from the issues that we mentioned that were affecting the US market. So those two areas have been strongest, and they have a greater impact on the returns from the BAM Adventurous Fund. At the cautious end, it's been a slightly different story, because markets, bond markets especially, have been negative this year, with interest rates rising and inflation expectations picking up. Both of those things can be negative for bonds, and so we've actually seen some losses in those areas. Within the cautious fund, we have a large weighting to alternative assets, which we like because they're not correlated to bond markets, i.e. when bonds are falling, these alternative assets hold their value, and that is why the performance of the cautious fund has been reasonable this year. It's been just below zero when you compare that to a benchmark of its peer group. It's achieved some decent outperformance. So at the adventurous side, it's been US equities, and at the cautious end, it's been our alternative assets which have added value.
Thank you, Frank, and thank you for watching and listening. I hope you found that interesting and informative. And if you have any queries, as always, please be in touch with us. Thank you.